Hey everybody, welcome to Mortgage Today for Thursday, April 4th, 2024, and oh, what a day it was. UMBS are up 4 basis points bright and early. S&P futures were up 16.75 points. Bonds began the domestic session in slightly weaker territory after a mostly sideways overnight session. This morning's economic data isn't the most riveting, but volume and volatility at the 9:30 a.m. confirmed that the market reacted to jobless claims. There was also some corrective flattening of the yield curve after several days of steepening. Jerome Powell spoke yesterday on monetary policy, which didn't really break any new ground compared to his press conference after the March FOMC meeting. He acknowledged that the high PCE print last Friday and said that some bumpiness in the road to the 2% inflation mark is to be expected. The Fed Fund futures still see a 63% chance of a rate cut at the June meeting. We also got news of a class action lawsuit that was filed against United Wholesale Mortgage alleging the company violated the RICO Act along with RESPA violation. This goes back to UWM's policy of telling brokers they cannot do business with UWM if they also broker loans to Rocket and Fairway. The fodder for the lawsuit comes from something called Hunterbrook Media, which is associated with the hedge fund Hunterbrook Capital, which is short on UWM stock. There is also other news today about UWM, but also being sued about potentially overcharging customers on servicing, and another class action lawsuit coming on that. The servicing economy decelerated in February according to the ISM Services PMI. While new business accelerated and new orders remained in the expansion territory, employment remained in contractionary territory where it has been 3 of the last 4 months. Importantly, the prices index decelerated by quite a bit, falling from 58.6 to 53.4. U.S. companies announced 93,309 job cuts in March according to the outplacement firm of Challenger Gray and Christmas. This is a 7% increase from February and more or less in line with a year ago. So we got jobless claims, which came in at 221,000 versus a 214 forecast. It was 212 previously. Then we had those continuing claims of 1.791 million versus 1.810 previously, and the Challenger layoffs. It was a surprisingly and mysteriously decent day for the bond market, and even more decent for mortgage rates. Unlike other days this week, overnight and early morning weakness was minimal. Gains began ramping up right after the jobless claims data. The direction of the move is no mystery, considering claims came in at 221,000 versus 214,000, but the pace of the move is harder to explain. Claims don't typically have this noticeable of an impact. No matter, yields drifted sideways to slightly higher into 2 p.m., and everything seemed to make sense until another sharp little rally over the following 2 hours. A big stock sell-off is clearly involved, and perhaps some buzz surrounding geopolitical risks. All told, it was enough to get yields back into the range that was broken on Monday, which is the 4.32 key level in the 10-year, right before the jobs report flips a coin on another big breakout. Of course, if the coin lands on the other side, rates are more likely to take a friendly lead-off heading into next week's CPI. UMBS ended the day up 8 basis points, so we closed the day at 100.79. At 100.79, that puts us just right above this messy convergence of indicators, which is the 50-day moving average, the 100-day moving average, and the 25-day moving average, all just right below today's close. So we got pretty strong floor there.